So let's get started with the stocks. And the biggest of the lot is, of course, Mediclinic International. It's the largest of the listed groups by market capitalization. I think it's probably the largest by market share, or close anyway, with Netcare in terms of South African beds. But it's now a global operator. It bought its way back into the European market with a purchase of a business called Herzlanden in Switzerland some years ago. It has bought assets in the United Arab Emirates. It's bought assets in the UK. And recently it listed in the Los Angeles. What am I saying? Los Angeles. The London Stock Exchange. Where did that come from? Would be the LASE. No, the LSE, the London Stock Exchange. And remember what they did is they bought a thing called Al Noor, which is also in the United Arab Emirates, but it was listed in London for some reason. So a lot of noise. Wayne's going to break that down for us in a minute. Market cap of about, I don't know, how many billion rands? I'm seeing there 7 billion pounds. That's definitely not right. Market cap in rands,
must
200
be 200
200 billion rand. We'll have a look at that. Price to earnings ratio 22.73, dividend yield of 1.5%. To be fair though, what's happened is that this thing is now taken over the London PLC listing. It had a whole lot of new shares in issue. The share price changed. The transaction resulted in a capital gain for the old MDC shareholders here. So what that's reflecting is market confusion.
Yeah, about Al Noor and the whole story.
What its PE is,
I must just make a little comment. That was the most complex share swap transaction I have ever seen in my life. You read it 5 times and you still made no sense out of it.
Because effectively what happened is that you were bought out, right?
Correct.
And you either then got new shares by way of distribution of a capital nature or as a dividend.
Yeah.
But for most people it was a capital gain, and then you got a different number of shares with a different code and a different starting price.
Different price, yeah.
So people, if they thought, well, look, this one did well for me in the past, that's all history. Now they've got this new thing coming in at a new price.
Yeah, but besides that, big global acquisitions and
let's talk about the business.
The very recent one was it Shire in the UK?
Spire,
one of the two. Can't even remember now.
And it's a 30% odd stake of a thing that also has like high performance gyms. It's a private healthcare group.
And of course what the whole UK healthcare market is not dissimilar to South Africa. People are jumping ship on NHS.
But the NHS is not as bad as the state healthcare.
No, but they're still jumping ship.
Yeah.
It's a
Rich people.
Private healthcare in the UK has taken off tremendously in the last couple of years, and that's obviously what they.
Because people like Discovery are selling private health insurance to wealthy Brits, and the idea then is that you would go to these kind of facilities.
And you don't have to sit and wait for the 10-year waiting list from the NHS.
And the Middle Eastern opportunity, I mean, again, there's a nice layer of rich people.
Doing very, very well, and that is clearly a growth area for them.
And Switzerland. Now, Switzerland is one of those developed world markets where there are state provisions, but it's kind of a market where it's compulsory in Switzerland to have medical insurance.
Correct.
So you have to, as a citizen, own insurance, and so there is money in these private hospitals that they run.
They've just done big expansions. I mean, they I think they bought another couple of hospitals there, or certainly opened up a few new hospitals there, and they've been incredibly successful in that.
And the margins there are good because the Swiss have a sort of laissez-faire approach with regard to medical pricing. What you don't want to be is in a country where some government official is giving you
dictating prices,
rubbish about what you're charging for circumcisions.
Yeah.
You know, it's like, if you want to have a circumcision in the bush, well, be my guest.
Otherwise,
but if you want to come to our facility, that's what it's going to cost.
Yeah.
Or if you want to go to a day clinic where it might be a little bit cheaper, you can do that too.
Yeah.
I don't understand this stuff.
Look, I mean, obviously, hospitals and medical provision is a political animal.
Yeah.
Same as life insurance policies. It's a political animal somehow in the system. And unfortunately, normally when politicians get involved anyway, they don't seem to add value.
Let's talk about the model here in this country. The way it works is that you get these private physicians and specialists, right? They maintain their facilities close by to the hospital. When you need something done to your eye, or you're going in for a hip replacement, then obviously the hospital charges the private practitioner, and you don't get to go to this place unless they've established in advance that you got the money to pay the bill through your health insurer, and that's where you get the authorizations and so on.
I mean, you don't, they carry virtually no bad debts in the system. I mean, I was sitting in a waiting room, surprisingly enough, on my eye a while back, and the admin staff there seemed to spend 80% of their time establishment establishing payment before the client even goes into the hospital.
Exactly. And they've got billing systems that keep track of everything.
Yeah,
I mean,
so
they could probably all do a little bit better. It burns me when you go to these places and they ask you to fill out a form again.
Yeah.
Because what did they do with the information last time?
Yeah.
So I think that will be part of also driving down and managing costs. Okay, share price chart's going to look very funny because what this is, it's only a 3-month chart because the new share code of Mediclinic International is MEI. But all you need to know is that it trades at around 200 Rand a share. And all you also need to know, I think, Wayne, is that to be honest, it's going to be wait and see to see what kind of earnings and what have you they're going to do.
But when you look at the share price, I mean, it's up 500, the old company now, up 500 odd % in the last 5 years. I mean, it's been a phenomenal performer. It's been
so this
the best
chart
performer.
that we see behind, this is what we're making, is it's only the recent time. But it's been a very successful, probably the most successful of the lot.
Look, there are risks to this company, and to me, it's not the company itself, it's the Rand.
Well, tell me about that, because you did mention that. What do you mean? You think the Rand's going to get stronger?
If the Rand strengthens and carries on strengthening, which I think, quite frankly, is, in my view, odds on.
Really?
It's going to take a tough time Rand earnings.
Because then Rand earnings are obviously going to come under pressure.
Correct.
So what's going to drive the Rand stronger again? What's you expecting
the mere fact that
sovereign debt upgrade from S&P?
No, the mere fact that it was so utterly and totally bombed. I mean, it was literally almost a 3 standard deviation valuation event. And under that scenario, nothing much has got to change and the Rand can strengthen simply because it is just so oversold, it's so cheap.
But what if interest rates increase in the US?
No, there's plenty of what if. Look, over time, there is absolutely nothing wrong with this business. It's a fantastic business. And over time, you want as much of your operations overseas out of South Africa because we have a structurally weak currency, as just might be too weak at the moment.
Okay,
so that's my only reservation.
Let's go with the hot or not thing now.
I'll still go hot.
Yeah, good. I'm going to go hot as well. It's a stock which we own in many, many client portfolios. We've got a big position in the hot stocks portfolio. We lived through the transition we were referring to earlier. So we kind of locked in our gains and we're now in the new one waiting for some forward progress.